Crypto started out completely independently. It was its own universe. All the price developments were completely independent from traditional finance. If stocks went up or down, it didn't really matter for Bitcoin. It didn't really matter for crypto. But this has changed. What we're seeing over here is a post by a traditional finance analyst. Eric Balchunas looks at data for exchange traded funds. And what we see over here at number 4, that's the Bitcoin ETF issued by Blackrock. Year to date, we saw almost 14 billion of inflows. And that compares to VOO, which is the leading ETF to invest in the S&P 500 with 82 billion. Now, what's so interesting about this data? It shows us the rate of adoption, as in how much money is flowing in relative to, say, the size of the asset class. Actually, even though the US dollar amount that gets into Bitcoin is smaller compared to the stock market, relative to the market cap, it's much larger. So have a look at this. Year to date, the Bitcoin ETF saw 0.65% inflows relative to the market cap. So that's the first line over here. When we look at VOO, so the S&P 500 ETF, we saw more inflows in billions, right? 82 billions versus just 13.7. But the market cap is also not just 2.1 trillion, but 47.5 trillion. So relatively speaking, Bitcoin's inflows are almost 4 times as fast. And so when the inflows are almost 4 times as fast, does it mean that the long-term returns of Bitcoin will be 4 times higher? For the S&P 500, we roughly see long-term returns of around 7 to 9% per annum, depending on whether or not we include fees and dividends, etc. So we've got 7%, let's go with that, for the S&P 500. Can we then expect, say, 28% long-term for Bitcoin? Unfortunately, it's not that easy because demand fluctuates, and also demand for stocks and for Bitcoin as well doesn't just happen through the ETFs. It's only that through the ETFs, Bitcoin gets bought more than stocks. But let's try that approximation. Let's try to figure out what's the minimum long-term return over, say, the next 4 years or 8 years or 12 years for Bitcoin at the absolute minimum. So here are the Bitcoin ETF holdings in US dollars. And this is going up over time, but it's also fluctuating because the Bitcoin price itself is fluctuating. So instead of looking at this in US dollars, can look at this measured in Bitcoin. And this is now way less volatile. We see how over time there is more and more accumulation of Bitcoin. What's also interesting is that Blackrock takes over more and more market share. So when we normalize this to 100%, we can see this very clearly. More than half of the ETF market is now held by the IBIT ticker, right? That's the Blackrock ETF. Without Blackrock, actually, we wouldn't even see the number of Bitcoin held in the ETFs growing. We would just go sideways. So a lot of money was flowing out of Grayscale, right? Because the Grayscale Bitcoin Trust was very expensive, and a lot of people moved over from Grayscale to the cheaper variants once the ETF launched. But all those other ETFs could barely make up for those outflows from Grayscale. The outflows seem to now slow down somewhat, and so this is going up, but we can't really say what the long-term trend is. Really, the long-term accumulation through the ETFs happens solely because of BlackRock's ETF getting more and more inflows. Now, to estimate Bitcoin's long-term returns, we have to look at how quickly does Bitcoin actually get acquired and what are potential other return drivers. Let's have a look at acquisitions of different entities. Let's also look at potential inflation, right? Bitcoin is still an inflationary asset. There's Bitcoin mining. Let's try to figure out what's all driving potential return. So for the Bitcoin ETF, we just look at the long-term acquisitions. Now, the ETFs were approved 1.5 years ago, in January of 2024. Over the course of those 1.5 years, 3% of Bitcoin supply was acquired. What's interesting is that the Bitcoin price itself also went up by 140%. So it seems like the accumulation is somewhat linear, despite it taking more and more US dollars to acquire those Bitcoin, right? It now takes 2.5 times the number of US dollars to acquire the same amount of Bitcoin, yet the growth seems to not really slow down. So let's just work with that assumption. Let's just work with 2% acquisition every single year, right? It's 3% in 1.5 years. So that's demand driver number one. Let's put this into our sheet. The next demand driver, or at least a driver for an increasing supply, is the very long-term holders, the diamond hands, potentially the people that have lost their Bitcoin, because this chart goes up pretty much indefinitely. This is the percent of Bitcoin that has not moved for the last 5 years. Yes, we do see a few blips here and there, but in general, this is going up. At what rate? It's hard to say. It increased a bit faster at the beginning than it is now. Let's be conservative and start at the beginning of this flat line when we were at 20% of Bitcoin that didn't move. And over those 6 years, we had an additional 10% that were frozen, that never really moved. So let's just work with that assumption. 10% over the course of 6 years, that's 1.7% of Bitcoin supply moving out of reach. Now, why do I use this cutoff 5 to 7 years? It's because once we include 3 to 5 years, we do have this balance sometimes going down. So people are riding the Bitcoin wave. When the price is going up fast enough, then some people take advantage of those high prices and sell their BTC. So we've got an even harder time to estimate how much this line will go up. But in the end, it's probably going to be very similar. If you take this data point over here, compare it to today, maybe instead of 1.6% per annum, it's 2 or 2.5% per annum. But it's in the same ballpark. So let's just work again conservatively. Who else is buying Bitcoin long term? Of course, the Bitcoin treasury companies, which is led by Michael Saylor. Michael Saylor has to buy always when Bitcoin is at high prices, because that's when he's got most collateral. That's where he can actually borrow against that collateral. So unfortunately, he has to buy high, but he is set up in a way that hopefully he never has to sell low. At least in past bear markets, he didn't have to sell. So this was a move from 60K all the way to 16K. Yet the balance that Michael Saylor held over that time did not go down. He rather continued to buy more. But of course, he can buy even more when the prices are at higher levels. Now, how quickly is this going up? Again, we have to work with some assumptions. We have quicker accumulation recently than at the beginning, right? This is again the number of Bitcoin. This seems to accelerate, but let's not work with a further acceleration of this chart. Let's just take the recent growth. So maybe from this data point to this data point, that's roughly 500,000 Bitcoin over the course of 1.5 years. A supply absorption again of 1.7%. So the lost Bitcoin and the treasury Bitcoin tend to grow at similar rates. But then, of course, we've also got the debasement, right? There's still more Bitcoin that enter circulation through the mining companies. It's currently at 0.8% per annum. And in 2028, this will fall to 0.4. In 2032, it will fall to 0.2. Now, since this is a long-term analysis of the asset, let's just work with the average over the next few years. So say 0.4% inflation. The inflation, of course, is not good for the price development. So we have to subtract that. Now, it is not just Bitcoin that's going up in its supply over time. Fiat currency grows much faster, right? When we look at USM2, we see a supply expansion of roughly 6.8% per annum. And if you're new here, this might actually be an eye-opener for you, right? So this is USM2, the monetary base. It's going up when we measure this growth by 6.8% per annum on a logarithmic chart. This is a relatively constant line. So the growth is somewhat predictable. And so when we look at things like gold, right? The gold price going from just a few dollars all the way to $3,400, or we look at the S&P 500 that goes up all the time, where people tell you to buy those dips. It's all just because of monetary debasement. Because have a look at gold relative to the money supply. Is it going up? Is it going down? It seems to just go sideways with quite a bit of volatility. Or have a look at the S&P 500 relative to the money supply. Again, sometimes it goes up, sometimes it goes down, but in general, it seems to rather go sideways. There's so much volatility that it's very hard to say what the long-term return of the S&P 500 is. Really, the number of points is mainly going up because there's more and more dollars floating around. And so we can at least add the monetary expansion as expected return for Bitcoin as well, right? The 6.8%. And so let's add this to our expected returns. Let's add this all up. We get to 11.7%. Over the course of 4 years, that's 56%. Over 8 years, it's 143%. And over 12 years, it's 279%. Now, this is my absolute minimum expected return for Bitcoin. It's likely going to be much higher because not all Bitcoin is liquid. And if we see, say, 1% in liquid supply contracting, the price will react more than just 1% to that. But also, some of those charts that we looked at tended to see some acceleration over time. For example, the Bitcoin treasury companies, or potentially even the purchases through the ETFs, because that went up linearly, while the price of Bitcoin went up by 150%. So probably if we see a price decline just in US dollars, if just the US dollar inflow stays somewhat stable, the acquisition through the ETFs might accelerate further. So we did a lot of very, very pessimistic assumptions. A close to 4x in the next 12 years is my absolute most pessimistic case. Now, why am I cutting off the prediction after 12 years? Because it's very hard to say what happens at that point. Because check this out. This is the number of Bitcoin that's on exchanges, and it peaked in March of 2020, and since then is going down. This y-axis over here starts at 0. And if we just continue to go down at the current rate, then in approximately 12 years, we'd be at 0. And what happens at that point? I don't know. Probably the exchanges will buy Bitcoin from the miners and from the people that have it in cold storage already before the 12-year mark. And then Bitcoin is likely going to become even more volatile and probably shooting to entirely new levels. So $1 million per Bitcoin in 12 years is, I think, quite likely. But again, this is the bearish scenario, right? This year would imply roughly 400K per BTC in 12 years. I think 1 million is the more realistic target, potentially higher. This is again the absolute bear case. Now, the target of this channel is not just to buy and hold Bitcoin long term, it's also to time the market somewhat and to take advantage of market inefficiencies, right? We do know that Bitcoin outperforms most altcoins most of the time. And so I made a comparison for myself. In this chart, we see my personal performance in the last 4 years, a bit less than that. So on the x-axis, these are monthly returns. And if I had just dollar cost averaged into Bitcoin, I would have gotten this gray line. But because I also bet on falling prices of all of those crap coins, of all of those very inflationary altcoins, my final return was more than 2x compared to just buying and holding BTC. And so it's about doing several trades with smaller betting size but high returns and see that compound over time. Here's just an example trade within our community, right? People are sharing their wins. How to make this all work is explained in dedicated videos, how to bet on relative valuations with various platforms, how to do the proper risk management as well, because it's not an approach that's that common. And so feel free to check it out. It's currently $125 per month. You will also lock in that rate. So once there's more attention on crypto again, I will increase the price back to 165. But if you sign up now, you will lock in that rate. I will not increase the price for anybody that signs up now. There should be a link directly to Premium over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.